Donald Trump says the Iran conflict is effectively over again. And that's what makes this story so interesting. Depending on which reports you read, Trump has claimed some variation of a peace deal, ceasefire, breakthrough, or imminent agreement dozens of times over the past few months. Some reports have tracked at least 38 separate statements suggesting the conflict was close to ending. But despite the latest announcements sounding more positive than ever, markets still seem nervous. And I don't think that's because investors don't want peace. I think it's because investors aren't sure they believe it yet. Welcome back to the channel. I'm Paula. And on this channel, we look beyond the headlines to understand the bigger forces shaping crypto, markets, and the future financial system. If that sounds like your kind of content, make sure you're subscribed. Now, on the surface, this should be a straightforward story. Just a few weeks ago, investors were worried about escalating tensions in the Middle East. There were concerns about disruptions to global shipping routes, concerns about oil supplies, and concerns that inflation could start rising again if the situation deteriorated. Some analysts were even discussing scenarios where oil prices could surge significantly higher if the conflict expanded. Then the narrative began to change. Diplomatic discussions resumed, tensions appeared to ease, and Trump repeatedly signalled that a deal was close. More recently, we've seen announcements suggesting an agreement may finally be taking shape. On paper, that's exactly the kind of news that markets should love. After all, lower geopolitical risk usually means lower oil prices. Lower oil prices can reduce inflationary pressures across the economy. Lower inflation can give central banks more flexibility. More flexibility can eventually lead to lower interest rates and increased liquidity. And historically, more liquidity has been one of the most powerful drivers behind rallies in stocks, crypto, and risk assets. So, if we're supposedly moving closer to peace, why doesn't it feel like the markets are celebrating? I think the answer is that investors have heard this story before. When a politician says a deal is close for the first time, markets react. When they say it again a second time, markets react. But after hearing the same message over and over again for months, investors eventually stop reacting to the words and start waiting for evidence. They stop pricing in promises and start pricing in proof. And I think that's exactly where we are today. The market isn't really asking what Trump is saying anymore. The market is asking whether it believes him. This becomes even more interesting when we start looking at what investor sentiment is actually telling us. Recently, the crypto fear and greed index dropped into extreme fear territory, reaching levels around 8 to 10. Those are the kinds of readings we typically see when investors are genuinely worried about the future. Think about that for a moment. We have headlines suggesting the conflict may be winding down. The worst case oil scenarios appear less likely than they did a few weeks ago. Yet crypto sentiment remains extremely fragile. That tells us something important. Investors aren't trading the headlines, they're trading uncertainty, and uncertainty remains high. The ETF data paints a similar picture. Over recent weeks, we've seen billions of dollars leave spot Bitcoin ETFs. One prolonged stretch saw more than $4 billion withdrawn from the sector as institutions reduced exposure and risk appetite weakened. While there have been recently some early signs of stabilisation, including fresh inflows into BlackRock's IBIT fund, the broader picture remains one of caution rather than confidence. Institutional investors simply aren't behaving as though all of the risks have disappeared overnight. And that's where I think most people are looking in the wrong place. Because I don't think the real story is Iran. The real story is interest rates, and ultimately, it's liquidity. The Federal Reserve recently left interest rates unchanged, but the tone coming from policymakers was more hawkish than many investors were hoping for. Rather than signalling a rush towards rate cuts, the Fed reminded markets that inflation remains a concern and that policymakers are still watching economic data very carefully. That's important because inflation isn't driven by a single factor. Oil matters, but so do wages, consumer spending, employment matters, services inflation matters, credit conditions matter. The Fed isn't looking at just one headline or one commodity price. It's looking at the overall health of the economy. And that's where the market faces a fascinating dilemma. Many investors have already built a story in their minds. The story goes like this: peace arrives, oil falls, inflation falls, rate cuts follow, liquidity returns, and risk assets rally. But what if the chain breaks? What if peace arrives? What if oil falls? What if inflation cools gradually? And what if the Federal Reserve still decides not to cut rates aggressively? Suddenly, we're in a completely different world. A world where the crisis ends but the liquidity never arrives. And I think that's the possibility investors are struggling to price today. For years, markets have become accustomed to a particular playbook. Whenever growth slowed or financial conditions tightened, central banks stepped in. Rates fell, liquidity increased, risk assets recovered. Investors learned that bad news often became bullish because policymakers eventually provided support. But what if that support doesn't come this time? What if central banks decide inflation risks remain too high? What if rates stay elevated for much longer than investors expect? That changes everything. And this is where crypto becomes especially interesting because crypto is currently telling two completely different stories. The first one is the one most people see every day. Prices have struggled, trading volumes have been weaker, sentiment has deteriorated, ETF flows have been mixed, fear remains elevated. The market is clearly nervous. But underneath the surface, there's another story developing. Stablecoins continue to grow, tokenisation continues to expand, financial institutions continue experimenting with blockchain based settlement systems, regulatory frameworks continue developing around the world, payment infrastructure continues evolving, banks continue exploring how digital assets fit into the future financial system. In many ways, the infrastructure story hasn't slowed down at all. It's still moving forward. And that's why I find this period so fascinating. The market is focused on today's liquidity conditions. Institutions are building for tomorrow's financial system. Those are completely different timelines. One is measured in days and weeks, the other one is measured in years and decades. Retail investors are still watching price charts. Institutions are building the rails that could support the next generation of finance. Which brings us back to the original question: what if the market simply doesn't believe the headlines anymore? What if investors have heard pieces come in so many times that they now need proof rather than promises? Because if that's true, then the next major move won't happen because of another announcement. It won't happen because of another post on social media. It won't happen because somebody says the deal is close. It will happen when investors become convinced that the outcome is real. And when that happens, the effects won't stop at geopolitics. They'll flow into oil, they'll flow into inflation, they'll flow into interest rates, they'll flow into liquidity, and eventually they'll flow into stocks and crypto. The question is whether we're there yet. And judging by ETF flows, fear levels, institutional positioning, and the Federal Reserve's cautious stance, I don't think the market is fully convinced just yet. Before we wrap this up, if you want to learn the exact strategies we use in the Crypto Wolf Pack in both the bull market and the bear market, we've created a completely free trading course for you. It's called the Crypto Liftoff course, and the link is in the description below. And if you're interested in automating your trading, Milkshake Matty and I have created a completely free TradeBot Pro course that walks you through the entire setup process step by step, from being a complete beginner to having automated trading signals connected to your exchange in around 30 minutes. Both links are available below. Now, I'd love to hear your thoughts. Do you think the market is underestimating the significance of these developments? Or do you think investors are right to remain cautious until they see concrete proof? Let me know in the comments. If you enjoyed today's video, don't forget to like and subscribe. Thank you so much for watching, and I'll see you in the next one.